Good morning. I'm Tom Rakocevic, Member of Provincial Parliament for Humber River Black Creek and NDP critic for consumer protection. Thank you for joining us today. Tomorrow is Black Friday, and early holiday shopping is well underway. Nowadays, most consumers shop online and have noticed a buy now, pay later option offered by a growing list of fintech companies at most checkouts. More and more shoppers, especially younger purchasers, are choosing this option, encouraging them to spend more by spreading it out, whether they can afford it or not, and are taking on more debt, layering credit products one on top of the other. And while traditional installment loans and layaways were reserved for big-ticket items, Buy Now, Pay Later allows installments on even the smallest of purchases, so you can even finance your slice of pizza. But what most consumers don't realize is that these Buy Now, Pay Later schemes exist in a regulatory gray zone and are not federally regulated in the way that traditional banking products and credit cards are, which are better understood. This lack of regulation and oversight leave consumers unprotected to the vague and varied agreements they offer shoppers for their use. And without clearly understood rules and expectations, there is no transparency for consumers in this gray zone. What are the hidden costs? What happens when you miss a payment, and how does it affect your credit? How do you resolve disputes? The list goes on and on. And since these fintech products are not federally regulated, it's up to the Ontario government to do their job and step in, because the growing economic effects of this product must be understood and managed, and consumer protection must always be paramount. By now, Pay later providers are estimated to process $25 billion in transactions by 2028 and are having a growing effect on consumer behavior, especially our younger generation. More and more merchants are having to offer this product to compete with one another, but potentially at a cost of 8% per transaction, far more than what credit cards typically charge. These disadvantages smaller businesses and can actually increase inflation by increasing the built-in sticker price of items to make up for these high transaction costs. Make no mistakes, the consumer always pays in the end. It's past time to get a handle on this situation to ensure consumers are protected and the online marketplace remains fair, transparent, and safe for all. To make this happen, I tabled a motion this week calling for the Ontario government to immediately establish a regulatory framework for Buy Now, Pay Later credit products to protect consumers from potentially predatory practices. I want to thank Ken Whitehurst, Executive Director of the Consumer Council of Canada, Acorn Canada, and others for supporting this important and urgent motion. And joining me today is Mr. John Halligan, an expert on the matter and a legal professional working as a privacy officer. I now call on him to speak. Thank you, John.
Thank you, Tom. So yes, there's a new wave of payments to take the sting out of the cost of buying things. This is called Buy Now, Pay Later. For a quick overview, Buy Now, Pay Later is a brand of financing, often categorized as a loan, which allows the individual to purchase immediately and pay installments in the future. Products such as Afterpay, Klarna, Sizzle, and PayPlan make up a lot of the market in this area. The touted benefits of Buy Now, Pay Later are large. For consumers, there's claims that this democratizes borrowing, allowing people to have early access to forms of credit. For sellers, potentially there's a new transactions and a movement into digital service spaces that they didn't have before. Banks have entered this space to diversify their income streams, and because they also own the payment rails. But there are inherent problems in Buy Now, Pay Later schemes. As Tom mentioned, these are a regulatory gray zone. So while they are treated as loans, in practice, often Buy Now, Pay Later schemes end up on your credit card. Where are the issues here? There's the potential for consumers to overborrow, card shuffle, pay on one and use on another. and it weakens the claim that this is an alternative to credit. There is a potential unaccounted debt regime that can be built up by the individual. For the seller, major players have the capacity to absorb the costs of buy now, pay later schemes. Typically, a credit card runs 1% to 2%. These products may have the seller or the retailer charge 3 to 8%. Where are those costs coming out? We expect that the costs are coming out from the consumer. The main thing that I want to keep in mind is the demographic that is best targeted by buy now, pay later schemes, and that is younger borrowers, millennials, Gen Z. This space is saturated with younger people entering the market. Now, the capacity of individuals to perceive what the actual costs are and the perceived costs at this stage are very vague because there isn't clarity in the buy now, pay later market. So what are we going to do about it? What are the policy options that we can see? Well, we look around the world where there has been a massive growth in buy now, pay later, especially in the UK, the US, and Australia, and they've brought about a lot of different changes that show, number one, transparency. We do not have, in Canada and in Ontario, an understanding of how large the buy now, pay later marketplace is and how it is operating. That is number one. The other options include creating affordability assessments. Basically, buy now, pay later does not mandate that people can actually afford the things that they are purchasing. And there is an educational aspect of this as well, that there is a deficit in understanding what people are signing up for, when they're signing up for it, and what are the implications of their purchases. Without action on BNPL, we could create a new wave of consumer debt that is hard to track and mandate. It's not just about protection of the individual users, but ensuring that our financial system can handle this rapid change and the movement into digital financial tools that are happening. A sustainable market needs more alternatives to high-cost credit, but buy now, pay later schemes are just another form of credit that we can potentially do without.
Thank you very much, John. Okay, we're now available